Bloomberg Audio Studios. Podcasts, radio, news. This is the Bloomberg Surveillance Podcast. Catch us live weekdays at 7 a.m. Eastern on Apple CarPlay or Android Auto with the Bloomberg Business app. Listen on demand wherever you get your podcasts or watch us live on YouTube.
With us again, and we're going to do this back-to-back, Stephen Flynn here in a moment on the credit side of this historic transaction. A trooper, Geetha Ranganathan, with us in the last hour and joins again. Geetha, somebody emails in from Delaware. Luz Beach or something?
Yep.
It never goes under freezing on the Delaware beach. Geetha, awesome. What happens to CNN?
So what happens to CNN? So the Netflix transaction actually is only for the streaming and the studio business. So CNN, TBS, TNT, which are all part of the Turner networks, they are going to be spun out into a separate company by the end of the third quarter of next year. Hopefully, I think along the way, Warner Brothers is going to look for some M&A combination for that asset as well.
With Mr. Roberts? Yeah. I don't mean to interrupt,
Paul. That's exactly right.
Wait a minute. Let's get this straight. Geetha, expert. Sweeney, expert. Keene, the dummy. I'll shut up. Paul, please.
Hey, Geetha, I was just going to ask, David Zaslav, the CEO of Warner Brothers Discovery, a self-proclaimed media mogul here, what happens to him in this transaction?
Yeah, that's what's kind of been the real head scratcher here, Paul, because, as we were chatting a little bit earlier this week, I mean, we thought that they would really favor the Comcast transaction because NBC was going to be spun out, and they had reportedly offered David Zaslav the position of CEO for the combined NBC and Warner Brothers streaming and studio. So it's really a little bit puzzling at this point, but I think what David Zaslav has done here is the best outcome for shareholders.
Yes, he did.
As he promised.
Yes, he did. He absolutely delivered for shareholders here. What is Jason Bazinet at Citi had a nice comment earlier this week. I was listening to one of his podcasts. This is kind of a long-term, this is going to be really good for Netflix because they need, believe it or not, even more content. They spend $17-18 billion a year on content, but they really need a library. Do you think this is a deal that Netflix really had to do, Geetha?
I think so, Paul. I mean, we were talking about whether this was really existential for Netflix. Many on the street had argued that this would be a major distraction, but I think it's not so much the cost of doing the deal; it's the cost of not doing the deal.
That's a good point.
And really, it's like as they kind of play the long game here. Netflix is not competing against Disney Plus or Amazon Prime; they are competing against YouTube, and this is where they really need to kind of double down on franchises. They're getting a lot here. Of course, you have all the franchises, you have the library, you have a prestige brand in HBO, you get a studio lot. So this was a once-in-a-lifetime opportunity, and Netflix made sure, they didn't miss it.
Okay, but you just mentioned the elephant in the room, which is Google. Now, they're distracted with AI, EIO, Google Gemini, home run, this, that, what Google does for us every day here at Bloomberg Surveillance. Subscribe to Bloomberg Podcast. Geetha Ranganathan, what is the response of Google to this transaction?
Good question.
I mean, they're already responding, Tom. I mean, you have AI here. Netflix is really kind of looking at this as AI kind of comes in and changes the whole content cost structure, changes the whole content industry. You can basically make a movie. You have all these video to or text to video functionality on these LLMs right now, and that can completely change the game. And that's really what Netflix is protecting against here. YouTube already is doing a lot in that field. So, they don't really need to do anything. They just keep doing what they're doing, and everybody else has to really get scared and buckle up. And that's exactly what Netflix has done.
So, Geetha, we're going to talk to Jen Rhee, Bloomberg Intelligence antitrust analyst, in the next hour here. But what are the companies saying about the regulatory risk to this transaction? Because I know there's some really big breakup fees here in the billions of dollars.
Yeah, it's a $5.8 billion breakup fee, one of the highest, I think, ever in a media transaction. We're almost 6% of the more than 6% of the enterprise value here. So definitely a huge number. Yeah, antitrust is going to be a problem. Obviously, Jen Rhee has much more perspective than I do, but you're basically combining the number one streaming service with the number three streaming service. So that's not going to fly nicely with regulators. So again, it's going to be a little bit of a wait and watch, and Netflix really didn't provide too much color on that. So we don't know whether they're going to sell the HBO service or how exactly they're going to manage that going forward.
Geetha, this is the question of the day.
Mm-hmm.
I'm sorry, all this other stuff.
Yeah.
Sarah, coming out of a Thursday night, what do you used to call Thursday nights in college?
Oh, that's my Friday. You rip it on Thursdays.
You rip it on Thursday.
Sure.
This is at Temple University in Philly. She comes
Temple.
out. Sarah, thanks for emailing in. What happens to my Netflix bill? I mean, Geetha, is the price of all this going to go up?
It has to, Tom. It has to.
Can you round it up? Are we going to stay under $20 a month for Netflix?
I think eventually it's going to go higher than that. But, as much as we complain about, Netflix price being high for the cost of the streaming service, if you're actually looking at the value you're getting per dollar, in terms of time spent per dollar, it's actually really a pretty compelling value proposition. And I think as they keep adding more content, as they keep adding, more to the library, of course, that gives them huge pricing power. It also helps them to build their advertising business. So maybe, a little bit of that the price increase, they can kind of offset that by also building their advertising business and keeping costs low.
Geetha, you're a trooper. I'm sure you got a 24-hour day ahead of you. Geetha Ranganathan driving our expertise on Netflix, given this historic transaction. Stay with us. More from Bloomberg Surveillance coming up after this.
You're listening to the Bloomberg Surveillance Podcast. Catch us live weekday afternoons from 7 to 10 a.m. Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business app. Or watch us live on YouTube.
One of our most popular guests, a huge value add through the year, is Katy Kaminski. She's with AlphaSimplex, hugely associated with the Massachusetts Institute of Technology. Katy Kaminski here on Trend. Katy, when we had some angst here recently, I guess we have a trend and we have stop loss. Were your stops violated within all the angst, or were you okay to stay on trend?
I would say that there was a little bit of a pullback in equities, but you really haven't seen anything substantial enough. And as you've seen the last 2 weeks, equities back in motion again. So that's kind of surprising. There are some jitters, though, I'd say. What's
the technical characteristic of the new strength in this equity market?
I say it's re-emerging. So you've seen definite strength in the equity markets, but you've seen that sort of consolidate and then re-emerge in the sense that, a trend that started to consolidate still kind of is holding on.
One of the heroes for Katy Kaminski and me, Paul, is Louise Yamada.
Yeah.
Iconic.
Absolutely. Smith Barney.
Iconic. And she would say, Louise Yamada would say, we're seeing distribution. And then boom, up you go or down you go.
Yep,
distribution is what we enjoyed this year.
So, Katy, talk to us about the dollar here. It seems to have kind of stabilized here. I'm not sure, from your perspective, is that a trend? Because we had an 8%, 9% sell-off, but it's kind of stabilized here.
Yeah, the dollar is stabilized from the weak dollar trend, but we've seen very different positioning in the dollar across different EM and developed currencies. I think I'm the most interested to see what happens with the BOJ because, you have U.S. cutting rates and then you have BOJ potentially hiking rates, which is going to kind of cause currencies to dislocate and move around, I would guess. So I'd say the currency trade is one that is up for grabs going on in the next 2-3 weeks.
So how do we think about just going into 2026? Are there any themes you guys are looking at from a kind of momentum type perspective?
Yeah, this is a good question because, I think the really interesting thing that we're seeing right now is just the very disparate trends that you're seeing across the globe. Fixed income in particular is very interesting. Just this idea, let's take Japan and Australia. They're in a completely different trajectory than the US. So I think it could be a very exciting year next year where you'd have sort of cycles of boom and deflation. And that's always exciting for us who are looking for different themes and trends over time.
Katy Kaminski with us, a very strong 35, 40 minutes for you. Katy Kaminski with us, and Yuri and Chimmer. Good morning to Boston as we look at different sides of the Charles Metals River, 92.9 FM up in Boston. Futures up 13, Dow futures up 43 right now. Again, for you, an historic moment for American capitalism. Paul, am I right? The only equivalent I can think of is Time Warner AOL a few years ago. I mean, it's that kind of romance and emotion, isn't it?
Yeah, absolutely. And this is a very interesting deal because you have two really, really high quality companies coming together here.
The headline, Netflix to buy Warner Brothers in $72 billion cash and stock deal. We continue with Katy Kaminski. Katy, the idea that we are resilient, that's a word I've seen 14 times in the last 48 hours. I would say we are resilient. Are we resilient because we allow capitalism, because we have a Schumpeterian ability to allow failure?
I mean, I think that's a very good existential question. I'd say that, the U.S. markets still have been leaning on relatively strong growth, and the numbers are still in our favor. What is a cautionary tale, though, is looking at places like Australia that had priced out all of their rate cuts for next year. So I think it's still a very, the tides can turn and you can see a hot inflation print or things that might kind of change direction. But for right now, growth has been steady. The U.S. is looking strong, but that can change if we start to see more deterioration.
I mean, I look, Katy, at where we are, and there's going to be winners and losers. What flavor, I mean, within CTAs and hedge funds, what flavor's the winner this year off trend analysis? What flavor is the loser?
Oh, that's a good one. Equities have definitely been a winner besides what happened in April. Gold is also a clear winner, silver. But when you look at things that have been hard to trade, I'd say it's fixed income, because fixed income has been very back and forth. And there's been a lot of speculation about sort of the general move in the Fed. Yeah. There's been dissents in the Fed. So I think fixed income has been hard to trade this year.
But Katy, how about on the commodity side? Boy, the dollar, I mean, the gold's ripping, silver even more so. I mean, I haven't seen movements in these precious metals in a long time here. How do you think about it going forward?
So I like to think about the gold trade, especially in a situation when the dollar is weaker, as this potential hedge. And you're really seeing something that people are holding on to while they hold on to something that they know they should hold. So equities. So it's kind of this risk, mitigator in a sense. And I think that's why gold is so valuable. People are thinking we got to hold on to something real. And that way, if things do get challenging, we have that.
I got to pin you down, Katy, to Paul's good question in commodities. I brought up the Bloomberg Commodity Index, iconic at UBS. It's a really important blended index of what's going on. I took it back, Katy, to Richard Nixon in gold, 1970. I've got a multi-decade Ruchir Sharma commodity boom. It ends 09-10. I got a bear market in commodities, but you know what? I'm sort of teen Sweeney's kind of breaking out. Do you have an uptrend on a blended commodity index?
So we're definitely seeing generally uptrends in commodities. The best ones have been the base and precious metals. Ags have been more mixed, and energies have actually, frankly, been a little difficult to trade because they've been somewhat range bound. If you look at the BCOM index, it does have a significant energy tilt. So that may make a difference in terms of looking at that particular index, but more equal weighted index, I would assume, would be definitely up, particularly because of what's going on in the metals.
Katy, we're going to hear from the Federal Reserve next Wednesday. How do you guys, as kind of momentum type traders, trend traders, how do you guys factor in kind of Fed policy? And maybe we're going to get a change in Fed leadership, actually.
So I'd say that, what's interesting, that's a very good question, because right now I am scratching my head a little bit about fixed income, because you do see yields going up in anticipation of what is seen as a foregone conclusion. And the way that we trade fixed income trends is really about where the prices move. So I think it is interesting to think about more short signals and perhaps less conviction in fixed income because yields are rising. I think that's really more the market being concerned about the BOJ in the short term. But the general trend has been more long for fixed income in anticipation of a tilt in the Fed to a much more dovish stance.
Katy, thank you so much for joining us all through the year. Katy Kaminski with AlphaSimplex, huge value, get a huge response from her work on trend analysis and all this, of course, off the work of Andrew Lowe and MIT, just absolutely legendary up in Boston. Stay with us. More from Bloomberg Surveillance coming up after this.
This is the Bloomberg Surveillance Podcast. Listen live each weekday starting at 7 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
We start with the heart and soul of our coverage. He has built our entertainment franchise truly worldwide. Felix Gillette, who's done serious reporting on this. You're right now at Michael's, and you're having a Felix Gillette power lunch at Michael's. Zaslav's with you.
Yeah.
Maybe Ken Auletta with all of his history here. What's David Zaslav thinking about this morning?
I mean, I think that it's hilarious that, we're just talking 3 years ago, we heard the argument that combining the Warner Brother assets with the Discovery assets was going to unleash all of this synergy that was going to better position this company to take on Netflix. And here we are 3 years later after Zaslav made that argument to all of us. And he's saying, you know what, what would be really great is combining these assets with Netflix.
Exactly right. What do you think the Netflix strategy is? Because one could argue Netflix was doing great.
Yeah.
Stock was doing great. Shareholders loved them. The bond market loved them. There was a nice, clean story. Now they're going to go do this huge acquisition and deal with all these crazy people in Hollywood.
Yeah.
What do you think their strategy is here?
Well, I think if you listen to what they were saying today, they think that those, all the TV series, all the movies, 100 years of library that you're getting from Warner Brothers, that those assets are really have not been utilized to a great extent, both in the U.S., but also they mention a lot internationally, that, they see a lot of room for growth in getting more money out of the HBO brand in particular in markets overseas. I mean, HBO had this incredibly rich brand history in the U.S., but overseas they always license their content to other local distributors. And I think Netflix has built this new model with a truly international distribution brand. And they think, hey, now we can have all of those HBO shows, all of those Warner Brothers movies, and we can get a lot more out of them in these markets around the world.
You're the expert on this.
I mean, it always looks great on paper.
What do you do with Casablanca? Make a Saturday morning cartoon?
Yeah, I think a video game or two, for your mobile phone on your Netflix app. Yeah, I think it's, again, these things always sound great when you look at them on paper. And then, of course, you get into the messy business of trying to actually combine these different groups of people. And that's where it gets a little messy.
I mean, Paul and I just talk about it. You've lived it. The last time you were at the Sunset Tower Hotel, you almost fell into the pool. You'd had one too many beverages with an umbrella in it. What happens on the Warner Brothers lot? What happens in those little cabanas that you've been in that Paul and I have never been in? Those people have a job?
I think that a lot of those people are sweating pretty hard right now. I mean, they're talking about $2 or $3 billion of savings a year. Today they're saying, well, we that's going to come out of the tech stack. That's not about, we're going to continue to spend money. We're going to continue everything just as it is. We're going to embrace the theaters, even though, we've basically been saying for years that we don't care about movie theater distribution. And so, I think it's a little worrisome for all those people.
We're commercial free for you the day of this historic transaction for Hollywood and for Los Angeles, New York, and America. Felix Gillette with us, Jason Bazinet and Jen Reed coming up as well into the 10 o'clock hour. Paul, I did all the work myself.
I know you did. Yep.
With the help of Google Gemini. 3 years ago, the Reverse Morris Trust was a $43 billion transaction. So now they're going to squeeze out a value of $82 billion.
Yep.
That's the first I've seen those numbers.
Yeah, I know.
But was this a win-win or win-lose or a lose-lose transaction?
Well, ultimately, it's going to be good for shareholders. I think I have to go back and look at the historical returns, but I mean, it's certainly way more than where the stock was trading just a few months ago. Felix, the management team of Netflix, very well thought of. They've done an extraordinary job reinventing the entire entertainment business.
Yeah.
One thing they haven't done is they haven't done a big acquisition.
Yeah.
How are people feeling about that? Do they feel like this management team can execute here?
Yeah, I mean, I think they're feeling like it's a big challenge and they haven't done it before. They also, not too long ago were saying, we'll never do advertising. Yep. And then what do? They launched an advertising service that now is starting to get traction. We're not interested in all these things. And they've continued to evolve and continue to make these big moves. I think it's fascinating to watch. Ted Sarandos has been chasing the HBO series from 2010. They used to be partners in the DVD business, and when they switched to streaming, they'd seen how well The Sopranos did for them in the DVD era, and they wanted it on their streaming service. And we're now 15 years into this pursuit of various people in the Time Warner Media Discovery world saying no. You can't have those assets. We don't want to give you our crown jewels. And, you pursue something long enough, and now Ted Sarandos will finally get them.
What's the role these days? I know he's chairman of the board. Reed Hastings, the founder here. Really, for most people, the visionary for this whole thing. What's his role these days, and what do you think his role was in this transaction?
I mean, I think he's, obviously the architect of this whole business from its start, the culture, the history, I think. But, Sarandos and Greg Peters have pushed it, and they've been, the last couple years of these big moves. You're talking about at first things like password crackdown, which didn't seem that glamorous, that's going to do, but that was pretty effective. They got a lot out of that. Then, again,
impacted my household.
Have there been some missteps under the current leaders, since Hastings kind of moved into this more, step back role? Look at the video games. They've been talking about video games for years as a thing Netflix was going to get a lot of traction with. Nothing, right?
Okay.
That's
where I wanted to go here to finish it up. Felix Gillette with us. We're going to go to regulation in a moment. The reality, folks, is Bloomberg and Lucas Shaw gets all the romance and love. He does screen time, and he's, does he wear anything but black? I don't think so anymore. He's out in LA. Felix Gillette's doing the actual work here at Bloomberg. And you've got Ashley Carmen and Kelsey Griffiths and this great team we've got. And they're all writing about stuff Paul and I don't know, like Twitch. Is there a rabbit out of the hat here in this transaction that justifies it rapidly for Netflix?
I think it's not some magic, rabbit out of the hat moment. I really think it's, they said, well, today, Greg Peters, why would this be different than all these other media mergers that have failed that we've seen that have been so tumultuous, going back to AOL, Time Warner. We've heard about Synergy for so long. And he's saying, look, we know this world. We know the entertainment world. We've proven it. This gives us more firepower, and we're going to double down on what we do.
Do they front load the synergies? I want to ask this to Jason Bazinet in a bit. Do they front load the synergies, stretch it out over 5, 6, 7 years?
I think they're going to get the tech synergies very quickly. I mean, getting rid of all the, the HBO streaming stack. They don't need that stuff. They have that in place. Yeah, I think the synergies will come quick and heavy.
Back to work. Felix Gillette with us, just driving all of our entertainment coverage here in New York. Really, really appreciate it. Decades of cred as well. Stay with us. More from Bloomberg Surveillance coming up after this.
This is the Bloomberg Surveillance Podcast. Listen live each weekday starting at 7 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
She has been on board this bull market since time began. Bonus round. She's the only one on the island of Manhattan whose shop owns shares in both Netflix and Warner
everybody's
Brothers.
Happy today.
It's amazing how you own both shares. How does it change? How does this transaction, $80 billion, how does it change the cast for buy-side America.
But I think this is the big thing is that corporate America feels comfortable that they can make this transaction and that it's going to be able to float through the system and create shareholder value. And that's a big change. Remember, corporate America has really been on somewhat of its back foot, and mergers and acquisitions have been relatively low, particularly of this size, because rates have been so high. So I think it's a sea change. I think it's, relatively good for the S&P 500, and I think it's going to be a great transaction for shareholders.
Barbara, with that, M&A coming back a little bit as a positive indicator for the market here, probably the next data point for this market is the Fed next week on Wednesday. What are you guys looking for? Are you positioning one way or the other? Or are you just kind of like everybody else thinking we're going to get a cut and we'll go from there?
Yeah, I mean, look, we've been risk on for this entire year, right? We thought that equities were going to be able to power through a lot of geopolitical risk. We added to equities back in April of this year. So, we've had the benefit of the wind at our back. I do think that the Fed's likely to cut. I think that you've got the labor market. It looks like it could probably use some relief. I think consumers could use some relief as well. And I think there's enough in the pipeline from the data that we have that says that the Fed could cut. It may be a hawkish cut where they say, we're going to cut and this may be it for a while, or it may be one more of a dovish cut where they say, we're going to cut and we're going to be data dependent. I think that's what the market's going to react to. But remember, in 2026, you're only looking for maybe 3 cuts. So if you get another 1 or 2, the market taking out 1 isn't necessarily going to cause a lot of damage.
Paul, the phrase data dependent was a drinking game for 2025. What should the phrase be for next year?
It's going to be who the next Fed chairman is. That's going to be the big flashpoint.
So how do you handicap that? Because I guess there's some parlor games out there about who it's going to be, Mr. Hassett, Mr. Besson. I don't know.
Right.
Do you guys care about it that much?
Well, of course we care about it, right? The Federal Reserve is the central bank of the world. It's a big one for us. We don't necessarily position our portfolios on who the next Fed chairman is going to be. We know that the Fed chairman, whenever they come in, they're always tested by the markets. We've seen this time and time again over the past 8 Fed chairmen that have been in place since the 1940s. It's either because they say something that the market misinterprets. No one knows exactly where their policy is. It's, they're going to be able to corral the committee. So we know that there'll be volatility around it. But I think the earnings support for 2026 is likely to be strong enough that it would probably present a buying opportunity.
Barbara Reinhardt with us with Voya across this nation. Good morning the way you listen to us. Good morning, 92.9 FM in Boston. Good morning, and Hartford, Connecticut as well at Trinity College. I look at this, folks, and I want to give you a vignette because what Ms. Reinhardt just said is really important. I'm in a room a couple days ago with Jacob Frenkel, the Bank of Israel, Mr. Shirakawa, the Bank of Japan, Portgay of Argentina. In the audience was Axel Weber of the Bundesbank, sitting next to John Lipsky, Definitive at Salomon Brothers and the IMF. And Barbara Reinhardt, when Portgay of Argentina talked about the seriousness of this Fed shift, you could hear a pin drop in the room. I want you to explain why this is underestimated by the media. They're treating it like a parlor game. It's really serious. Discuss.
Of course. Look, what the U.S. Federal Reserve does affects the rest of the world. And the transmission mechanism is really through the Treasury market, which is the benchmark of all risk-based assets throughout the entire world. And importantly, it also will have an effect on the U.S. dollar, right? A lot of weakness in the U.S. dollar this year has helped propel international equity markets. It means that places like the euro have had a lot of strength. That tends to be somewhat difficult for their companies to be able to, digest that increase in their currency. Makes the exporters under a lot more pressure. But the central bank for the U.S. is the central banker to the world. And I think you can't underestimate that. It's more than a parlor game. You have to watch it closely. But I think it's one of several things that we're watching over the course of 26.
You mentioned earnings, Barbara. We've had, really good earnings in the third quarter, good earnings in the second quarter. Is the earnings outlook enough to support this market? Because it's not cheap, this market.
No, this market, unfortunately, is not cheap. But even if you don't get any multiple expansion over the course of 2026, you're likely to have And this is if estimates get marked down, you're going to have 10% earnings growth, right? Bull markets don't die when you have earnings growth this strong. Earnings peak out generally about 2 years before a bear market starts, and bear markets get slaughtered by the Fed. Yep. I have the Fed still cutting interest rates. So while I realize that valuations are at nosebleeds, I don't think you get much in terms of multiple expansion, maybe even get a little bit of contraction next year. But I would say that the earnings are going to support the overall equity market.
You and Gina Martin Adams are on the same page. Gina Martin Adams looks at HB Wealth Management. And the heart of the matter is those earnings and even the revenue oomph up top comes from an ability to sustain margins. I don't hear anybody talking about margin erosion.
Yeah.
I mean, is it even within the thinking?
Yeah. Look, some of the lead indicators that you watch on margins, they did come under some pressure earlier this year, but it looks like they're starting to bottom out. So for us, if you get past, don't forget, in the first quarter, even the first 6 months of 2026, you're lapsing a big tightening in financial conditions because of the tariff shock. And that will make year-over-year comps, at least for the first half of this year. And it's difficult to have a lot of visibility beyond that.
Yep.
Because of the midterm elections, that lapsing of year-over-year tightening of financial conditions with easier financial conditions in 2026 means that it's likely to give a lot of support to equities.
Yeah, I think that's probably the case. How about just what screens well for you guys these days? Because it's easy for us to fall back on the AI trade because it's such a big trade.
I know.
And it's worked so well for many investors. But are there other things that are screening well, factor-wise or sector-wise?
Yeah, I think, certainly, I think the emerging markets they've been on their back for the better part of the past decade.
Yep.
They've outperformed the U.S. over the course of this year. So has Europe. I think maybe taking some bets on some diversification isn't necessarily a bad thing at this point. You can diversify, out in EM. I think you've got a lot of good strength in terms of an advanced manufacturing push into China. There's green shoots in China at this point. So that isn't a bad place to be. And I think also you can diversify even down into some lower cap size in the U.S. and you probably still be able to do well in 26.
But then as you did years ago, do you suggest the high quality route is the only way to go? I mean, can you buy the garbage here and get some beta?
Well, look, I think the quality has been beaten down, especially in Europe at this point, right? So, you kind of say that, like, look, is that a buying opportunity overseas? I think in the U.S., you have to stick with your winners, right? I know values had a nice pop over the past couple of weeks, but I would say you probably stick with your U.S. large cap growth winners.
What do your clients, sorry.
No, go ahead, Tom.
What do your clients say who said, I don't believe you, Barbara, 3 years ago, and they didn't participate in the joy? Do you they speak to you anymore?
Of course they do. Look, we have long-term clients at Voya, and we're investing for retirement, which is really important. So we have a 40-year horizon, and I think the meaningful piece for us is that we're helping people retire better and we're helping send children to college. Those are our two big things that we really feel a tremendous amount of meaning to do. Our goal is to make sure to give them a smoother ride for their retirement investments. And that means that when you see signs of weakness, you lean into it when you have the underlying strength of the economy behind you.
Can I do an audible?
Sure, let it rip.
You were in Hartford, right, at Trinity College? Okay.
Yes.
Love Trinity.
All these colleges are dying. It's whatever the story is, folks, it's sad to see colleges that want to be like Trinity dying. And yet Trinity, I'm going to suggest, of Hartford, Connecticut, is thriving.
Yeah.
What's the pixie dust?
Well, I think there's a couple things. I think a lot of colleges and the smaller colleges are under pressure because enrollment isn't necessarily so strong, right? And I think a lot of kids want to go to school in the Southeast, right?
You're seeing that huge.
Everybody wants to go. Duke, Vanderbilt, Tennessee, you name it. They all want to be there because the weather is good. Alabama. But I think that the thing that the liberal arts schools like Trinity give you is the opportunity to be able to analyze something and to be able to write. Now, I know some CEOs have been out saying that, you don't want to go down that road. It has served me incredibly well in my career.
I agree, but what you need to do is switch it. Instead of a year abroad at London School of Economics or St. Andrews, you do a year abroad at Wake Forest.
You do.
That's what you do. Barbara, thank you so much. Barbara Reinhardt at Trinity College, and of course, outstanding at Voya, one of the major people 3-4 years ago, grabbed me by the bow tie and said, Tom, just shut up and get on board this market. Of course, I didn't. listen to her.
This is the Bloomberg Surveillance Podcast, available on Apple, Spotify, and anywhere else you get your podcasts. Listen live each weekday, 7 to 10 a.m. Eastern on Bloomberg.com, the iHeartRadio app, TuneIn, and the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.